Good afternoon, everybody. Sorry, slightly late. I had a bit of an update issue trying to get everything working on here. So yeah, I'm now here. I'm live. Sorry, it's I said 1:10 already. So naughty me. I'll make sure I'm on time next week. So yeah, it's been a great kind of week since I last updated you all. Again, thanks to Mark at PSP Insurance who joined us last week. And if you haven't had a chance to watch that, I definitely recommend having a look at last week's video. It talks about the importance of insurance and the different types of insurance that you need as a business. What have we been up to in the last week? Not very much, really. It's been very busy doing lots of kind of coaching with business clients. Also, I was up in Bristol yesterday, which was a great opportunity. So thank you to the guys at Locum PM who invited me to their retreats to talk to everyone attending that retreat yesterday about basically introducing them to the concepts of business structures and tax and all the opportunities to save tax, but also the different options, what they've got when they come to setting themselves up. Today, I just wanted to do a quick introduction to VAT. It's a topic that people don't tend to like, and actually businesses are a little bit afraid of, especially when they're starting up, and also getting to that £85,000 turnover threshold. So I just wanted to do a quick update or introduction really to VAT and kind of put your mind at rest, hopefully. So let's do it a little different, that one there. So there we go. So here we go, a brief introduction to VAT. So what is it? So VAT stands for value added tax. It's basically a sales tax that you should be charging on all of your sales at a point that you become registered. So it's important to remember, you don't need to, if you're not VAT registered, you don't need to charge VAT, but unfortunately you also cannot recover VAT as well. So it's also something that kind of, we've had people that have come to us ask if they can claim back the VAT they've paid. If they're not VAT registered, then you can't claim that back. So how does it work? So as I said, it's a sales tax. It's tax on sales. If you are registered for VAT, then you charge VAT on all of your taxable sales. This is output VAT. You can claim back any VAT on your purchases, and that's called input VAT. Come back to that in a little bit. Every quarter, generally, you have to make your VAT returns every quarter. You basically have to use the HMRC system, which is now Making Tax Digital. So a lot of you might have heard about Making Tax Digital. It's been kind of mentioned a lot. If you watch TV or radio or listen to the radio, you'll probably have heard about QuickBooks, Sage, Xero, all of those kind of software platforms talking about Making Tax Digital. So this was rolled out to the VAT system a couple of years ago, and now every business who is VAT registered will need to submit and comply with the Making Tax Digital legislation. It was supposed to be rolled out next year to individuals, so self-employed and any individuals who have rental income, but that's actually been paused. It's been kicked down the road a couple of years. So at the time, it was supposed to be anybody who had an income of over £10,000 was supposed to be falling under Making Tax Digital. Unfortunately for many people, that has now been delayed at least until 2026. Just when do you need to register? So if you go over the VAT registration threshold in any rolling 12-month period, or you know that you're going to exceed it in the next 30 days, you should register. And that amount, that registration threshold is £85,000. And I meant to just reinforce, it's any rolling 12-month period. So it's not necessarily in line with your financial year or the tax year. We often do get people that come to us with their kind of carrier bag of records or shoebox of records. They've got no idea how well their business has done during the year. They might not drop those records off to us until December, January, before the tax return deadline. At that point, we identify that their turnover has gone over the threshold. Unfortunately, we then have to go back and register from the date that they breached it. So you do get a little bit of flexibility. So the month that you breach it, so say you were to breach it now in July, so you've just breached it today, you would get the rest of July, you get the rest of August, and you would need to be registered for VAT from the 1st of September. So you get a bit of a leeway to get ready to get your customers, make sure they're aware that you're going to be VAT registered and preempt them at preparation time. So again, when it comes to VAT preparation or VAT registration, VAT preparation is very key. There is the ability to register for VAT in advance of hitting that deadline. There's, again, depending on who your customers are, if you are basically operating business to business and your customers are VAT registered, then you would charge the VAT, they claim back the VAT. So there's no kind of issues either way. Unfortunately, we deal obviously where we are in South Devon. Our leisure and tourism is one of our biggest sectors, and we have a lot of B&Bs and small hotels. And for them, if they were to get up to 85 in that VAT registration threshold, to add 20% onto their costs, their customers are individuals, their families, their people coming to stay at their hotels. They don't have the ability to claim back or they can't just charge 20% because their customers can't claim back the VAT. And when you've got the likes of obviously other bigger hotels and budget hotels they're in competition with, they simply can't absorb that. So that's why, again, a lot of the time we do see B&Bs and small hotels down here open during the summer and then close in October till the following year, so they don't go over that threshold. Because in reality, once you've breached that VAT threshold, once you've gone over that VAT threshold of 85,000 to kind of keep the status quo, you need to be pushing well over £100,000 of turnover to actually kind of maintain your income. There's other reasons why people might want to register for VAT early. I'm just going to make myself a little bit bigger there. There we go. You might want to register yourself early if, for example, you are dealing with other businesses who and actually want to appear bigger than you might be. It's the same reason that I talked a couple of weeks ago about the business structures and talked about being a sole trader versus limited company. A lot of the time, actually, as your business grows, it makes more sense and you save more tax overall as a limited company. But in the early days, it probably works out better to be a sole trader. What we find is, depending on the nature of the business, if you want to start up and you want to appear that you're bigger than you are, some business owners choose to be limited company from day one. They choose to be VAT registered from day one because it gives this it's maybe more prestigious, this kind of illusion that they are bigger. So that's another reason why people might register for VAT sooner than they need to. As I mentioned, you need to charge output VAT on all of your invoices at 20% is the standard rate. There are also reduced rates at 5%. Sometimes energy costs are charged at that. So if you look at your energy bills, sometimes those are charged at 5%. There's also exempts. There's a number of things that are exempt. And then here in the UK, we also have some things that are zero rated, which is a kind of a rare thing. I don't think there's many other kind of countries that actually have a zero rated exemption, and that includes the likes of like children's clothes. That is all zero rated. On the claiming back, you can claim back VAT, but there's a few rules that you need to have. You cannot claim it back if there's no VAT actually charged on the invoice. If there's some expenses as well where you simply can't claim back the VAT either. So business entertaining is one of those things that as a business, you can't claim back the VAT on that at all. And also if you haven't actually got a valid VAT invoice with a VAT number on there, and so the actual VAT broken down, you can't claim back the VAT. And I'll put the summary there is don't upset the VAT man, because he seems to be coming back with a vengeance at the moment. We had a few quiet years without many kind of compliance checks or investigations, but there certainly seems to be a lot more activity now. So just be aware of that and make sure you don't upset the tax man. I mentioned making tax digital as well. I just wanted to kind of flag that again. So as I mentioned, April 2019, that was when it kind of started being rolled out for VAT registered companies with a turnover above 85,000. Earlier this year, all businesses who are VAT registered, no matter what their turnover, they now all have to comply with Making Tax Digital. I said Making Tax Digital should really be called Making Accounting Digital, because that is actually more what the focus is on. So you need to be actually using digital accounting rather than say anything's changed with on the tax side. As I mentioned as well, it was supposed to be rolled out from next year for individuals with a turnover above £10,000, whether that's from self-employment or property income. That's been delayed to at least 2026. And it's also likely that £10,000 threshold is going to be increased up to 30,000 and possibly more. So we'll wait and see more on that one as well. We have, then quickly on Making Tax Digital, there is a kind of a few myths about that we kind of get questions all the time. And one of those is, will I have to do 4 tax returns a year? Well, the answer is yes, but no. So you will have to do 4 submissions to HMRC a year, much like, say, VAT registered businesses do. They have to do a registration, a submission every quarter. On top of that, though, you also will have to do still have to do a form of the annual tax return as well. So yes, there's 4 different, well, it's actually 5 different submissions you'll be needing to do a year. So it's adds a little bit more on the admin burden. We have to pay more tax. No, it'll all be done exactly the same. As I said, at the moment, it is very much about making accounting digital rather than making tax digital. So there's currently no other plans to change how the payments of tax will work. Another comment we get is that people are terrible with technology. Many people still use manual cash books. Some people just give us the shoebox of records, as I mentioned. And so that is actually quite a legitimate fear for many people. So they are kind of looking at manual alternatives. HMRC have been running a trial. It didn't go very well, which is also one of the reasons why it's been paused and deferred a couple of years. So again, we'll wait to hear more on how they are planning to allow the digitally excluded to make those submissions. Will you have to have an accountant? No, you certainly do not. You can do it yourself. Again, HMRC will kind of be providing free software. Again, that's the next one as well. There will be a free option how to submit that. We haven't had any details of what sort of software that will be or how that will work. But no, you do not need to have an accountant. Obviously, if you would like one, then there are many fantastic accountants around that are here to help as well, and obviously like ourselves. Then I was just mentioning this, and I will come back to this another time. Cloud accounting, as I meant, making accounting, making tax digital. Those are kind of the 4 ones that we use. Obviously, Sage is now Sage Business Accounting, but QuickBooks and Xero are the 2 biggies that we tend to use more than any else. Just to mention as well, FreeAgent is the other one. That is owned by NatWest, who also own Metal Bank. So if you were using NatWest or Metal, you do get FreeAgent for free. And actually, we're also getting a few comments about FreshBooks, because I'm aware that they've got a tie-in with Barclays. So you can actually get FreshBooks for free if you are a Barclays customer. Fab. Well, that was all I wanted to run through today. It's about 12 minutes worth. If anybody's got any questions, you know where I am. You can always drop me a message either on the Facebook group or LinkedIn or YouTube. Feel free to reach out anytime with any questions you've got. Have a great week, everyone, and I'll see you next Tuesday at 1 o'clock. Bye for now.